Good morning and welcome to today's session on how to get business finance using technology to support business recovery and growth for your business. I'm Henrietta Brody, I'm the Chief Executive of the Greater Birmingham Chambers of Commerce, and I'm joined by Guy Bridge, Chief Executive of our finance partner, Finpoint. Guy will be exploring and offering some top tips on the current options available for businesses looking to access finance and also chatting you through Finpoint's free platform. So, why are we talking about business finance at this time? Well, it's a bit of a tricky environment to navigate, I think it's safe to say, as well, all being well, we continue to emerge from the coronavirus pandemic. According to the British Business Bank, 45% of SMEs applied for external finance support in 2020. That's up from 13% in 2019, with gross bank lending to smaller businesses standing at well over £100 billion. That's 82% higher than in 2019. Of course, much of this was through the government's COVID-19 lending schemes. The government is planning to publish full data on those schemes: bounce back loans, coronavirus business interruption loans, future fund, and the newer recovery loan scheme in the not too distant future. So we'll be watching out for those. But looking ahead, our own Greater Birmingham Chambers of Commerce quarterly business report shows a bit of a mixed picture for businesses, with many experiencing growth. In Q2, 60% reported that they're expecting their profitability and turnover to improve over the next 12 months. But also significant numbers reporting challenges, with roughly 1 in 6 businesses reporting a decrease in domestic demand over the previous quarter, around a third reporting a worsening cash flow position, and 1 in 7 reporting being under pressure to raise prices as a result of finance costs. So a bit of a mixed picture, with some businesses experiencing growth and some still facing some of those challenges. And here at the Chamber, we're of course a not-for-profit that's been in business for business since 1813, and today employs around 90 members of staff, all committed to helping connect, support and grow the local business community. Our 2,700 members cover all sectors and sizes of business, but do have something in common, and that's a passion for seeing their business and the city region succeed, and having access to finance to enable growth or weather challenges really is a critical part of that success for businesses. Which brings us neatly to today and on to Guy's presentation. Guy, welcome again. Over to you.
Thank you very much. Thank you, Henrietta. Right, well, no, thank you, and it's a pleasure to be given the opportunity to speak this morning with fellow GBCC members and to support the Chamber. I think we share many of the same collaborative business-focused values, and today perhaps one to highlight is for us, it's all about continuous improvement and how we can help individual businesses that come to us for support. So thank you again. As Henrietta mentioned, it's a challenging environment. There's a lot happening in the world of finance for businesses, and I think I'll start with saying all lenders will say they're open for business, but the reality, as most of you will probably realise, is always a little different. But what I'm going to do today is run through what we do and how we can help, with a little bit more detail on some specific areas for businesses to think about, and they're happy to answer any questions at the end. So what I'm going to just try and do is share my screen, and then we'll run through, and please tell me if that is all now showing. Right, okay, well, as I said, if I kick off with, as Henrietta said, there we go. Computers working properly. Right, yes, so today is all about how to get the right finance and how the technology can help. And in brief, let me say a little bit about Finpoint. I mean, who are we? We're a financial services marketplace, and we're using technology to assist businesses access finance. We're not lenders ourselves, and that's important to note, but we are a regulated intermediary by the FCA. And we've got a team of finance specialists who will speak to every business who uses the technology and comes to the platform. And it's one primary overriding aim to help them in finding the right funding for the business. And we offer a largest choice of lenders for potential borrowers. And I think that's the key thing. It's providing businesses that come to us with choice. And we've got a slightly altruistic element in and approach, in fact, because our goal, certainly in the medium to long term, is to bring down the cost of financing, but encouraging lenders to be more transparent also in the way that they deal with small businesses. So what we're seeing on the slide there is what often businesses are looking to finance. Plenty of different sorts of activity that you'll be involved with, that you might be looking for help on. And in the challenging sort of times post-pandemic, it's even more important to know what we can do and how we can help. And what I will say is that lenders will quite rightly at the moment focus on the business's ability to service any debt or lending and ultimately repay. But often they do that and they look at a business without a great deal of flexibility. So this can be frustrating for all concerned. Where we can help is to get a business in front of as many lenders simultaneously with one application, and to many lenders that businesses won't be familiar with, whether it's regional or national providers. And the important thing is that the lender, the borrower rather, or the applicant is always in control of what they're doing in the platform. So if I just move on slightly, what are the options? Well, I'm not going to go through all the individual products that are listed there. You will probably know whether you're looking for asset finance or commercial mortgage. But if you're just looking for growth capital or funding to assist cash flow, and you might not be sure, there are a lot of options open to you. I mean, what I would say is that for most, you will probably call the ability that overdrafts are less available from any bank. It is extremely difficult to get them, even for the strongest credits or well-established businesses. The good news is that there's increasingly more alternatives for businesses to consider, and some of these products are structured in a way that businesses only pay for what they use. So becoming more like an overdraft, because historically overdrafts have been the main form of financing working capital. The other thing I would say, just in the general types, I mean, historically, invoice finance has been seen as an expensive type of financing, also a last resort. But that's no longer the case. There are a lot of competitive providers in the markets, and you can get some good and appropriate facilities, which again, as I say, you don't necessarily pay unless you use them. And I think what I'd like to highlight is businesses can feel very confident in using the technology to apply and provide the information, because it's a virtual data room effectively. The business is in control and they decide who they share their information with, but otherwise it's not going anywhere. So it is very secure from that perspective. And what I think, again, worth noting here is traditional lenders placed great store in the last 2 years' trading results when accessing or looking at loan applications. But for a huge number of businesses, this information is meaningless or certainly less value post-pandemic. And that's it's a question for a member of them just surviving. So there's a lot of information that can be accessed to help make the correct underwriting decisions, and alternative lenders have invested heavily in technology themselves that we can help pull together to enable those underwriters to make more informed decisions. And post-COVID, SMEs are set to benefit from the investment rather than take the option of the larger clearing banks or the computer says no mentality. But it's also worth noting at this point that business owners' personal finance records are increasingly becoming more relevant in the absence of recent trading activity or data, with a lack of maybe a normal 2 years trading period. So it shouldn't be a showstopper, and there are plenty of finance providers out there that will be more flexible than perhaps the traditional ones that you might look at. So that's just a little bit of an overview in terms of the general perspective as to how lenders might look at the market. And I'm going to go into a little bit more detail about a couple of the options that are more tech driven, or certainly that we could help you with. One, recovery loan scheme, and secondly, then the R&D tax credit scheme. So if we first turn to the RLS, as it's known, so another acronym that we've all got familiar with, the RLS, or the Recovery Loan Scheme, as Henrietta referred to in the introduction, it's the replacer or the successor to the bounce back loans and the civils support schemes that closed in March. Now, the government's done a lot through providing these schemes. The recovery loan scheme itself, as you can see on the slide, what the criteria are: you've got to be a UK trading company. Would you be viable if it were not for the pandemic? And have you been adversely impacted? I think that most businesses can say that they have. The difficulty with viability is there's a lot of wiggle room in there for a particular lender when they're looking at a business and considering whether to provide them with funding. And clearly, obviously, if you're insolvency, then you're not going to qualify. And what you can actually get is quite substantial. And for a lot of smaller businesses, the fact, and the last bullet there talks about a PG, a personal guarantee, you won't have to provide it for facilities up to 250,000. But I think I'd sort of highlight all this with a few words of caution. There aren't that many lenders. Well, there are certainly not as many lenders accredited to provide the RLS loan as there were for CBILS and BBLS. Currently, there are 66 lenders listed. They're not all active, so they might appear on the British Business Bank website, but they're not all actually up and running, as it were. And the scheme is certainly not being actively promoted for a variety of reasons. Principally, I think, because the point at the bottom there, which is a statement by the British Business Bank who's running it, is if a lender can offer a choice of a commercial loan on better terms without requiring the guarantee, that's the guarantee for the lender, provided by the RLS, they should do so. And that, I think, it sums things up at the moment in terms of market conditions. The majority of businesses, if they go to get or try and apply for a recovery loan, they are being offered alternative products, and that's the reality of it. If you are successful, I mean, you can push for having an RLS. The typical rates that you might see start at 6%, and the government has put a cap of 14.99%. So that's the absolute maximum APR that you could be charged. So there is some merit in terms of the RLS from an interest rate perspective. But as I say, the scheme's been not as widely used as the previous schemes. And again, as Henrietta pointed out, the government is likely to publish some statistics later this month on all the activity of these facilities. But I don't think businesses should get too depressed. You can get a recovery loan scheme. You can come through the platform. We've got a number of lenders that are providing that. And so if you're looking for one, we can certainly try and help you in that respect. I'd finally say it is a little bit more complicated to apply for, but we can certainly do our best to assist you in that process. The second thing I wanted to touch on, I did a webinar earlier in the year with the Chamber on research and development tax credits, which was well attended, because it's a subject that I think every small business should consider. Essentially, as it says there, that it's a tax relief program introduced in the early 2000s by the government to support any costs or spend that a business is making towards innovation. And there's very loose interpretation on that. If you're actually improving a process, it doesn't necessarily have to be actual technology or physical development of a process. It can be just improving the way you do things. And similarly, like the RLS, there's some qualifications to apply. But again, as long as you're a UK company, you've got something that is slightly different in terms of what you're doing, then you may well be eligible. And I think it's worth pointing out that on average, in the last few years, 2.5 billion of tax refunds have been given to businesses by the government through this mechanism. I use it for our company as we do development for changes in the way we present information to businesses and improvements to the actual technology that we have. So long as we can evidence that actually it's doing something different in a different way and is going to be beneficial to those that use it. And I think that's the key thing about R&D expenditure. You might not think it's eligible, but it certainly could be. And there's about 20,000 businesses or more, and it's growing all the time, that apply every year to benefit from it. And what I think is important though is to it can be quite a complicated process to go through if you don't know what to do, but it's worth using a third-party advisor or a specialist that can guide you through the process. And I think that's critical. One, there'll be a check on what you might say. Oh, well, I think that's eligible, and that's a well, no, this is what you can claim for, or what would be eligible. So we've got a curated panel of providers and R&D tax specialists that can help. And there's a number that will provide, an hour's free assessment and review of your business to see whether or not you can actually go forward and qualify. So I think it's worth doing. The turnaround time for processing these things once you get in an application, and it might take several weeks to formulate that application, and you do need the most up-to-date completed finance accounts. But normally Treasury is turning around these things within 4 to 6 weeks. So it's a means whereby you can actually get up to 33% back for the money that you've already spent in developing your business. And it actually then goes on to help support working capital for the business. So it's not something to be ignored. And I would urge any business that has the potential to, or has got the time to have a half an hour, 45 minutes discussion with the specialist, is worth pursuing, absolutely. So those are the two key things I wanted to touch on. We can also do a number of other things for chamber members. We're a member ourselves, so we know the challenges that we all face. Part of our platform now, if you go into it and utilize the process, even if you're not actually looking to definitively apply, we can help you with some processes. As you go through it, we've tied up with a company called Tomato Pay, who, if you link in your open banking details in the platform, we can provide a free forecast cash flow for you based on that data. We also operate through our tie with UK Finance, a business current account comparison tool. And as it says there are currently 84 business current account types available now, and a lot more coming into the market. There's one that's going to be launched soon for small businesses that is going to have much more competitive terms from a challenger bank than the mainstream providers. And so it's worth having a look at that, and we can point you in the right direction for that, or more information on the Chamber website. And finally, we've got an insurance partner, and as you can see there, it's the FSB, which is the industry body for small businesses. We've tied up with them, and they do have some very sort of broad support, and certainly meet with the values that both the Chamber and Finpoint aspire to. So in brief, so we can do a number of other things, and there's more information on the website at the Chamber to help you with. I just wanted to end finally with how the process works, and whilst I don't want to sort of run through an online demo, I mean it's as noted earlier. I mean we're here to help business access finance. The platform through Finpoint and in partnership with the Chamber, you get to it through the Chamber website. It's completely free. You can input your basic data, and more information is integrated from Companies House and other sources. There's no credit check made on your background. There might be when you go through and actually have a detailed discussion with a lender, but that's before you get to that stage. Whatever you put in the system, there's no credit check or impact on your credit score. What we're enabling through that process, and it takes 5-10 minutes maximum, to have a virtual application, one application, and then the ability to compare and discuss potential with relevant lenders. So if you're not quite sure whether or not you're looking for invoice finance facility or revolving credit, the system will highlight and point you in the right direction as to what is most appropriate. And the key thing is behind that, everybody gets a call from one of our specialists. We will talk through. So if the application isn't appropriate or you haven't got the right information, we'll be very honest with you, very open and transparent. It's very collaborative. And I think, as I said earlier, we share a lot of the values of the Chamber, and we're committed to supporting customers and businesses in every way that we can, but with their interests to the fore. And I think that's key. So that's what I wanted to say today. There's a lot more I could say, but it was just to give a brief snapshot of what the technology can do and how we can help. And I'm happy to open the floor for any questions.
Fantastic. Thank you, Guy. That was a really useful run through of some very topical areas and a very useful tool. And just picking up on the R&D tax credit side of things, really just to emphasize, it can be surprising what does qualify under R&D tax credits. I know we've made successful claims before in the past as a chamber for very bespoke updates to our CRM system, for instance, and after the last year, with the rapid changes in technology and the way that businesses had to invest in doing things differently, there are probably a lot of businesses out there who don't even realise it, but could really benefit from that R&D tax credit opportunity. So well worth looking into, as well as, of course, that wider platform and support for access to finance for businesses. So just picking up on a few bits and pieces, you mentioned that the recovery loan scheme is going to end on the 31st of December. What's your sense on what's going to happen next? Once that sort of government support's pulled, will there be successor schemes? Or, what's going to happen next in terms of that access to finance picture for businesses?
Yeah, Henrietta, that's interesting. It's a difficult one to answer in some ways because the government never hasn't up to now been as good as it could have been, or as we would all like, in terms of being clear as to what they will provide. I think it's clear they will provide something. The RLS, the Recovery Loan Scheme, is very similar in a way to what previously existed called the Small Firms Loan Guarantee Scheme. And that had been operating since the late 90s, I think. So my guess, and I do have conversations with UK Finance who have a view and manage things and input from various lenders. My guess is that there will be a further scheme, but it'll be going back to what was more traditional support that the government would offer for businesses, whether it be a new business or a developing business, with those specific criteria. So in many ways, it's going to be similarly framed to the RLS, I would think. The support from a guarantee perspective, for providing personal guarantees, that's the question mark. And I think that's what is a concern to a lot of businesses. It's do I have to provide a personal guarantee for the loan that I'm getting? I mean, one could argue that as a business owner, you should be able to say, yeah, I'm going to support my business and I'll provide that guarantee. But it is quite a challenge, and nothing is certain. So to answer your question, I think there will be some additional support as of the January 2022. Exactly what that is, we don't know, but my guess is it's going to be very similar to the Small Firms Loan Guarantee Scheme.
Fantastic. And what's your sense on how the schemes have run so far? I know we're waiting for the official data, but I know particularly in the early days, there were a lot of concerns about businesses overextending themselves, taking out debt that they wouldn't be able to service moving forwards. Has that actually come through from what you're picking up from lenders? Are we seeing lots of defaults starting to happen, or is it perhaps not as bad as we thought it may be?
There's been interesting articles and commentators in the press and all the rest of it. I think there was a desire that they'd like it to fail. The Bounce Back Loan Scheme is probably one of the most successful schemes to support businesses that's ever existed. And £50,000 or up to £50,000, it might seem a lot as an individual, but for businesses, most businesses can support that repayment schedule. I mean, if you think about it, £50,000 over 6 or 10 years is several £100 a month, but it is something that's manageable. The experience that we're seeing, so the Bounce Back Loan is very successful, Civils was very successful, but obviously for larger amounts. And the amounts taken out, I think you quoted the numbers, they're quite substantial overall, and 1.7 million businesses took some form of government support out of a total, spectrum of, I think it's 4.9 million in the UK. So a lot of support. The point on recoveries and bad debts, I mean, businesses that took a facility out in April last year will have had 3 or 4 months now of repayments. And certainly the sense that I'm getting is that there are very few arrears. there will be obviously some insolvencies and companies that haven't been able to survive, but the statistics that have been quoted of up to 60% of businesses would default is just not there. I really don't think that's the case, which is the good news. And the good news is that, you know, it has been a support and helpful, but it doesn't mean to say that businesses still don't need finance, and they do. A lot of them are, particularly in the retail and hospitality sector. Whilst they might have been able to increase pricing, I think they need to actually still be able to have additional liquidity, and it's worth then coming to the chamber and using the platform.
Fantastic. And on the platform, you know, what is it, if you could sort of summarize in a nutshell, what it is that you reckon makes the platform the best place for businesses to go to check out the options? So, you know, obviously we've worked with you for some time, I know all the background, but whether you could sort of summarize for our attendees what you think makes the platform a particularly useful tool for finding out those options.
Great to have the opportunity to answer that. I mean, it's the simplest and easiest for finance platforms available in the marketplace. I think your assessment and a number of other partners we work with, and we work with the Federation of Small Business who provide a similar sort of service to them, and to another number of other chambers throughout the country. And they've taken the view that we're providing a collaborative approach to the business, and we're looking and aiming to help that business. We're not looking to sell credit, and that's the key difference. I think there's the other element is, you know, our technology does what it says it does. You know, we're not actually prioritizing one lender over another lender. We're giving the borrower the choice, and if they need help in making that choice, then we're there to talk to them about it. And I think the other crucial thing is that it's free to use, but in terms of pricing and how we then get remunerated from a lender, it's very, very transparent. Not all of our peers like that. And I think that's the crucial thing. It's free to use, it's easy, it gives you lots of options, and the technology does what it says on the tin. And, you know, I don't think we would be used by the trusted business support groups that we are if that were the case. So hopefully that answers the question.
Absolutely. It is very much that neutral broker role, isn't it?
Yeah.
That there's so many options out there, just streamlining it down, acting as that neutral broker of what's right for you. Fantastic. So I have a final question for you, Guy, which is looking ahead, you know, thinking about the next couple of years when it comes to the access to finance environments. Do you have any final messages for businesses on what to expect, what to look out for, what might be coming their way?
I think the key thing I would highlight is that the overdrafts, as I mentioned, sort of seem to be something that is no longer available, and most of the mainstream clearing banks will shy away from providing them. But there are other products that are in the markets. They'll become increasingly used. The pricing will improve over time as people get better. Obviously, as things improve, you know, and the risk profile of businesses hopefully improves. But there's a lot of choice, and that will continue. And whilst the clearing banks, and we shouldn't forget that they're the main providers of credit and facilities to SMEs in the country, they're important. They're not going to go away. They're the most competitively priced, or they provide the most competitively priced products. But the important thing is there's a lot of people that are competing with them. They're going to improve their game, and all in all, I think over the next few years, whatever the economic environment, the finance world is going to be more competitive, and therefore that can only be a good thing for small businesses. So that's probably the way I would look at things. It's always going to be a challenge for SMEs because they get less of a look in, or that's the perception within larger institutions. But I think that will change as well as people get more efficient and have different ways and models for approaching those businesses.
So interesting times ahead. New competitors entering the field, a bit of disruption coming
Yeah.
to the industry. It's going to be an interesting one to keep an eye on.
Absolutely.
Thank you so much, Guy, for joining us today and for your advice and guidance and some of those interesting updates and sort of tidbits on what to expect. Please do check out the Finpoint platform. Finpoint are a preferred partner for the Chamber. There's lots of information available on the Chamber website. And I look forward to seeing you, Guy, and our delegates on future webinars. Thank you very much, everyone. Enjoy a lovely sunny day.
Thank you. Thank you.